Hello everyone, I'm Chris Kapches, President of Chestnut Park Real Estate. I'm here today to provide you with the March market report for the Greater Toronto area. There's a lot going on in the data for March, and I hope in this short period of time that we have, I'm able to convey exactly all of the complexities that are going on in the market. What we saw in March, at least as far as the numbers go, is the first negative variance of 2024. In January and in February we had positive variances, and here in March we had a negative variances. We saw in 6,560 properties reported sold. Unfortunately, that was almost 4.5% less than the 6,868 properties that were reported sold last March. So on first blush, you'd think, market's not doing so well. Well, one has to remember that there's a sort of sequence that's taking place. If you look at the screen behind me, you'll see what the market was doing last year. And if you look at those numbers, you will see that we started off in a way that became more positive as we moved towards the summer months. In fact, it became a little too positive for the Bank of Canada, because both in July and in June, it increased the rates by 0.25%, taking us to where we are now, 5%. And then again, if you look at those numbers, you will see that there was a steady decline all the way through 2023, right to the end of the year. So we started picking up at the beginning of this year, and as a result of that, there was an enthusiasm in the market. We had some very positive numbers as compared to last year in January and February. So, but March, it was really starting to pick up last year. So the fact that we're slightly off does not mean that the market this year is not robust. And I'm going to demonstrate why that is the case in a few minutes. First thing to look at is the average sale price. You can see that even though the sales numbers were off, the average sale price came in at $1,121,000. That's for all properties sold, including condominium apartments. And I have some comments to make about how the condominium market is performing, or rather I should say underperforming. Last year, the average sale price was $1,107,000. So we're up a little over 1% year over year. So sales were down marginally, and average sale price was up marginally. That's not normally a situation in which the market is weak. In fact, it's usually the opposite. And in a moment, as I said, I'm going to get into showing you why that is the case. Some other things that need to be looked at: days on market. Only 20 days on market. Last year, 19 days on market. By any estimation, when all properties that come onto the market sell in only 20 days in a given month, that is a market that is operating very robustly. So one might add, why then are there not more sales if you're telling us that the market is so robust? Well, the problem lies in the average sale price. We have reached a price point that is making it very difficult for most consumers, most buyers, to get into the market. When your average sale price is $1,121,000 for all properties sold, that's a hefty number. But it belies the fact that if you look at the average sale price for example, in the city of Toronto, for detached properties, over $1.7 million. For semi-detached properties, over $1.3 million, and yet notwithstanding that, we still had the number of sales that we did. The problem is household income has not kept up with average sale prices. So even though there's huge demand, and I'm going to demonstrate why I say that in a moment, even though there's huge demand, people can only afford so much with these lofty prices. So let me explain the demand side. If you look at all the sales that took place in March of this month, as I said, over 6,500 of them, they all sold at 103% of their asking price. Now that is an incredible number, because it points to the fact but I'm speaking specifically about Toronto. In the case of the entire GTA, it sold for 102% of their asking price, still a significant number. I mean, when you're selling almost all properties over their asking price, that is an indication that you have huge demand out there that's pushing the ultimate sale price beyond the list price. If we were to drill down below that number, and that number is for all property sales, to say detached properties, which, as I mentioned, in Toronto came in at over $1.7 million, they sold for 103% of their asking price. That is an incredible number when you think, as I said, that the average sale price was in excess of $1.7 million. In the central core of Toronto, they also sold for 100% of their asking price, and the average price was $2,375,000. So even at that lofty number, they're selling for close to, if not more than, their asking price. Why? Because of the demand. If we were to come down to semi-detached properties, which is sort of what I'm calling the sweet spot in the market now, you will see that the demand in that case is even stronger. All semi-detached properties in the GTA sold at 107% of their asking price. I'm going to repeat that, 107% of their asking price. If we drill down into the city of Toronto, they sold for 110% of their asking price. And if we drill a little lower, just say to the eastern districts, all semi-detached properties sold for 116% of their asking price. Those are not numbers of a poor, slow market. Those are numbers of a very robust, almost frenzied market. Not quite COVID, but very strong. Only reason why the sales numbers are not as high is because, as I said, just too expensive. And so if we look at condominium apartments, we see that they are the worst performing sector of the market. So one might add, if condominium apartments are the worst performing sector, why is that the case? They are the least expensive. Average sale price in Toronto was only $729,000. Well, the reason they're the worst performing sector is because the consumers of condominium apartments are usually first-time buyers. First-time buyers have the lowest household income of probably anyone else in our consumer society. So they're trying to get into the market, but they don't have sufficient funds in order to break into even the lowest sector of the marketplace. And as a result of that, condominium apartment sales in Toronto were off by more than 15%. So hence we have this fractured kind of marketplace where detached, semi-detached properties are doing well, average prices are up there, all sales are taking place at or higher than the list price, and they're doing so in very short period of time, 19 days. In the case of semi-detached properties in the eastern districts, all properties sold in 11 days. That is a market that wants to explode, but simply can't because of the fact that the consumer is constrained by the high cost of borrowing. I believe that that's going to continue into the month of April. We're already seeing early signs of that. Prior to this presentation, I reviewed what was going on in the April market, and as of early April, we're seeing that we're slightly ahead of where we were in March. By the time we get to the summer months and then head into the second half of the year, the variances are all going to be positive. And if the Bank of Canada reduces its lending rate, which there is every anticipation that it'll happen, the market will pick up even more. It won't explode to pandemic levels because, again, as money gets cheaper and more people get into the market, they're going to be driving average sale prices up, which in turn will constrain some people from being in the market. So very exciting times in the market, lots of different things going on in various sectors in the marketplace. And it'll be very exciting to talk about those developments and dynamics that are going on in the market when we give you the April market report. So I look forward to that. Till then, stay well. Thank you.